In the previous class, business ownership simply means who runs the business, who benefits from the setting up of that business. That is business ownership. And we have different types of business ownership. In the previous class, I talked about sole trader, which is a business run and controlled by individuals. I talked about partnership, which consists of 2 to 20 people. The next one I'm going to talk about today is cooperative. I want to talk about cooperative. It simply means a business that is owned and controlled by members. So teachers can come together to form a business. We call it cooperative. Teachers, cooperative. Bankers, cooperative. Farmers, cooperative. So they are coming together because they do the same job. They have the same occupation. And they come together to form a business. That is cooperative. Do you get cooperative here? Yes. It's a business that is owned, controlled by members. When I'm talking, you better stop writing. That's just an advice. It's a business owned and controlled by the members. Teachers, all teachers coming together to form a cooperative. Lawyers, all lawyers coming together to form a cooperative. Farmers, all farmers coming together to form a cooperative. That is cooperative. Do we understand cooperative here? Yes. Good. So what is the formation of a cooperative society? The formation simply means how do they get it set up? How do they set it up? Where do they get the money from? So formation, they must apply for permission to set up. Once approved, they issue what we call the certificate of incorporation. So to set it up, it means for sole trader, to set your sole trader up, it's just your own idea. You set it up. You can start even in front of your house. For partnership, you need 2 to 20 people to come up together to agree on certain decision, then you carry on with your partnership deal. But for cooperative, because it's going to be a limited liability company, it has to be recorded or registered through the registrar of businesses. So whatever documents they need, they have to take it to the registrar of businesses. And as soon as it is being approved, then they can become a cooperative society. So to form it, it has to be legally accepted. Not like a sole trader or partnership. A cooperative needs government approval. And the person in charge is the registrar. Who do I call it? The registrar. So the registrar will approve your application, either to approve it or to decline it. So if it declines it, you cannot start the cooperative. But if it approves it, then you can start the cooperative. So that is the formation. The formation means what? How it's being set up. You need to apply. The members have to apply. And as soon as the application is being approved, they will get what we call certificate of incorporation. And that means they can start the cooperative society. Do we understand formation? Do you understand formation or not? Yes. Formation is how it's being set up. To set it up, you have to make an application to the registrar. The registrar can either approve it or decline it. If it approves, the business continues. If it declines, you cannot continue. Then the finance, how do they source for funds? Members, because we said cooperative is a business that is formed by members. It simply means members have to contribute capital to start the business. Do we understand finance here? Finance means how they get the money. So the money they use in running the business is through the members. So here I wrote, members contribute capital and the profit is reinvested or distributed among members. The capital, because it's a business, they are bound to make profit, yes or no? So whatever capital they put into the business, as soon as profit is made, they can put back the profit into the business. That is an investment, which is retained profit. Retained profit. Or they share it among members equally. Do you get the finance here? The source for money, the source for fund through members. Members contribute amount of money to start the business. And if profit is made in the business, members share the profit or put it back into the business. Finance. Do we understand finance now or not? Finance is all about how the source for fund to run the business, the capital. So members will contribute capital into the business. And when the business makes profit, they either put it back into the business or they share it among members. Do we understand finance? Yes. The third one, control. Do I talk about liability? No. Oh, limited. Liability is limited, which simply means whatever happens to the business pays for it. It does not affect the owners of the business. So the debt of the business cannot be transferred to the members. That is limited. Do we understand limited here? Liability means debt. Liability means what? Debt. So whatever the debt is, It does not, it ends with the business, not the owners of the business. That is limited. For sole trader and partnership, they are unlimited liability, which simply means whatever happens to the business, the owners might be the one paying for the debt. Do we understand liability now? Do you understand liability or not? Yes. The next one is control. For the control, they elect members that takes charge through committee. So maybe we could have 50 members, but we elect our EXCOs. We elect what? EXCOs. Executives. Those that run the business are elected members of the cooperative. So the members will choose, they're going to choose who to be their leader. So that is what I meant here. A management committee is elected which runs the affairs on behalf of the members. There could be 50 members, but those that are going to run the affairs of the business, they will be elected by the members. It is democratical. 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 Do you understand that? Democracy, they elect. Is it clear or not? The next one is separate legal entity. It is separate legal entity because the business, let's say this is the business, these are the owners of the business. These are the owners of the business, they are separate. The business is the business, the owners are the owners. That is separate legal entity. But if the business cannot be separated from the owners, it simply means the business is the owner, so they are going to be in there. So this is no legal entity. That means the business and the owners are the same. But here, they are separate. So the owners are different from the business. Like a sole trader, the owner of the business is the business. The business is the owner of the business as a sole trader. Partnership, the owners are the business are the owners. But for cooperative, the owners are, I'm talking here, you're saying, I shall begin. Don't worry, the exam will come soon. The exam will come soon. That's where I know how to catch you. I think you understand this, right? Legal entity, it simply means the owners are separated from the business. They are not the same. Do we understand that or not? Yes. Taxation, no. Yes. As soon as you set up a business, if it's a sole trader, your name, your business is you. The business is you, you are the business. That is no separate entity. But when it comes to cooperative, because it's an incorporation, it simply means the business is different from the owners. Whatever happens to the business does not affect you. Whatever happens to you does not concern the business. That is separate entity. But as a sole trader, whatever happens to your business happens to you. Do you get it now? Do you understand separate legal entity? Yes. Do we all understand or not? Yes. Then we have taxation. They pay corporation tax, which is tax on profit. Unlike a sole trader and partnership, they pay income tax. Sole trader and partnership pays what? Income tax. But for cooperative society, they pay what? Corporation tax. Do we understand that? The next one is regulatory requirement. Whatever their affairs are, continue, okay? Continue at that back. Whatever their affairs are, they have to publish their financial statement to the public. Sole trader will not do that, partnership will not do that. But for cooperative society, whatever their financial statement is, they have to publish it to the public. That is regulatory requirement. Do we understand regulatory requirement here?
What must be published?
Yeah, their financial account. How money comes in and goes out of the business, they have to publish it to the public.
Wow.
It is mandatory, it's regulatory. It's by law. There's nothing you can do about it. Dissolution. How is it being dissolved? It's being dissolved by mutual agreement. Because we come together to agree to start the business, we can as well come together to stop the business. Mutual. Just a mutual agreement here. Mutual agreement simply means we all agree to stop. That is dissolution. Or probably through the court order. The court can stop them from continuing. Do you understand court order? Or do you understand dissolution? Yeah. Dissolution simply means how can they be stopped? They can be stopped by members coming together on mutual agreement or court order through the court. To stop the business. They come together to form the business here, right? They can stop the business too. So the government can stop the business or they can come together to stop the business. Do we understand this? Yes. And the last one is continuity of existence. What does continuity of existence mean? Continuity of existence, I'm talking here please. Continuity of existence means if the business owner changes, can the business continue or not? The business can continue because it's an incorporated business. Continuity of existence means, can we continue the business even if one member wants to stop? Yes, we can continue because it's an incorporated business. Unlike sole trader and partnership, there's no continuity of existence. Do we understand continuity of existence now? It simply means if the owners change structure, will the business continue or cease to be in continuation? The business will continue. And why is the business continuing? The business is continuing because the owners are different from the business. The owners are different from the business. This is the business. These are the owners. So if any of them leaves, the business will still continue. If he leaves, the business continues. But for a sole trader, because the owners are the same as the business, if one leaves, the business leaves. Do we understand? Yes. So for sole trader and partnership, there's no continuity of existence. But for every limited company, there's what? Continuity of existence, because the owners are different from the business. Do we understand? Yes. Thank you.